Somebody commented on one of the videos was like, hey, can you go a little bit more in depth when it comes to reading the price, reading the tape? We read the tape every day. I'm not sure what you mean by the Dow looking like it's trying to get back to break even on the year, or what is it? Flat on the, I said break even, trying to get back to flat on the year. This line that I put on there, that's the yearly open on all three indexes. The Dow looks like it's trying to get back to flat on the year. Remember, the Dow has been the laggard on the year. We have been seeing bearish divergence on the year right here. The Dow has been diverged. This is all part of reading the tape for whatever the cousin name was that was asking about that. This is all part of reading the tape. We've been getting that bearish divergence on the Dow, right? Here, been getting the bearish divergence. We've been making lower highs on the Dow since the middle of January 16th. We've been making higher highs on the NQ, and we've been making higher highs on the ES, right? So this is bearish divergence, right, via price action. This is price, because everything that I do as far as looking at the charts or making decisions is all based off of price action. The same thing all the indicators do. When you're looking at the different indicators, the indicators are just looking back at the price action and doing these mathematical calculations and then putting it on a visual representation of what they just calculated, right? So looking at what the price action did, right? I'm looking at, okay, this is bearish divergence, right? I don't need to look at the RSI or the MACD or the whatever the other stuff is, all the other indicators that, you know what I'm saying, I used to look at. I'm not knocking people for using indicators. I used to use the indicators too, but I'm just looking at the price. That's the same thing the indicators do. Everybody that be like, oh, this price action stuff is not real. What your the indicators that we all have used and some of us still use are using this price action that you say is not real, right? So we've got the bearish divergence on the Dow. Now, let's talk about it for a second. Let's talk about it, right? We got the bearish divergence on the Dow, right? Let's go over here to what's the name, because I can pull them up together quicker, right? So we got the bearish divergence on the Dow, and when we got the bullish divergence on the Dow went stupid. I'm gonna put my NQ first. The Dow went stupid when we got the bullish divergence, right? Dow went stupid, Dow went crazy. Now, how far? I didn't want to do that. How far will we come down after getting the bearish divergence, right? Let's look at let's read the tape. Let's read the tape. How far down can we go? And let's talk about it from the sense of what stocks are moving what right now, right? Let's talk about it in the sense of what stocks are moving what right now, right? So, and Black Spiders, since I pretty much missed what I was going to talk about this morning for my entry, that's why I ain't started the other live where we just read the price action. I told you what I was going to do right there. I missed it running my mouth. That's what I was watching. That's what I was planning on taking the short off of. It did it without me. Jolly pies. Okay. When it comes to tape reading, you reading the tape, you looking for certain patterns, if you will. You look for certain things that repeat, if you will. You look for certain indicators of what the market wants to do, what the algo, not the algos, not to be confused with the algos with an S. The algos with an S are just as unintelligent as you and I when it comes to reading price action, right? Those algos are only doing what people like you and I tell them to do. And these people may be looking at MACD. They may be looking at um EMAs. They may be looking at SMAs. They may be looking at whatever. They may be looking at the fundamental data, and they may be looking at this, or they may be like, okay, if Jerome Powell say this, do this. You don't know how they're coding their algos, right? I'm not talking about those algos. I'm talking about the algo that runs the market, the algo that makes all these three indexes run correlated, right? All these three right here, they run correlated. When they stop running correlated, that's the market tipping its hat or showing its hand, not tipping its hat, that's saying that, tipping its hand, like leaning it too far down. You can, they got a big joke over there. He done slip. He ace high over there. He done slip, right? It's showing you that money is starting to shift to a different area, right? Starting to shift to a different area. When we got the bearish divergence, right? We ran out the June lows here on all three. Ran out the June lows, right? Ran out the June lows on all three. Right? Once we ran out the June lows, then we got the bullish divergence on the Dow. The Dow gave us bullish divergence, right? I know we done heard this a million times, over and over and over. If I get the right low right there, we done heard this a million times, right? Okay, so if anybody who don't understand what I'm saying, right? Once we ran out the June lows here in September on all three, we started making lower lows on the ES, lower lows on the NQ, and higher lows on the Dow, right? Started making higher lows on the Dow. That's the bullish divergence, right? Reading the tape. That's the bullish divergence. Then the Dow went stupid, came up and ran out the August highs, right? Went stupid, ran out the August highs. Let's go to August. Dow went crazy. Dow went crazy. Ran out the August highs. Dow still sitting at the August highs right now, just a little bit below it. NQ, nowhere near the August highs. ES, nowhere near the August highs. Right? Now, Dow went crazy. Ran out the what's the name? Now, let's combine the tape reading, right? We're looking at the like the tape. This is what's moving in the market, right? Now we're starting to see, we saw the bearish divergence on the Dow over here. See, the Dow just been consolidating ever since December. The Dow has just been consolidating since December. The NQ and the ES dipped down, right? The ES came down to this order block. The NQ came down and took out the lows at that order block, right? The equal lows at the order block. Then the NQ went crazy. The ES went crazy. The Dow still consolidating, right? The Dow still consolidating right around those August highs, right? Right around them August highs. Everybody support and resistance, seeing this as heavy resistance on the Dow right there. Support and resistance, seeing that as heavy resistance on the Dow, right? Now, what has been since the beginning of January up until now, right? From the beginning of January up until now. Let's go over here. Let's see if we can see it on TradingView. Right? Let's see if we can see it on TradingView. We're gonna go to TradingView and we're gonna go to the heat maps. Let's see if TradingView give it to us like we want to get it. We're gonna go to the heat maps, right? Performance. We're gonna go back to January. We're gonna go back. What's this? Middle of February. Can we do? It's only gonna let me go back a month. It's only gonna let me go back a month. So, and that's gonna put me back to January 10th. That's good enough because it started running January 6th. Yeah. So okay, so January 10th, that's good. So now we're looking at the S&P 500. We're not gonna group it. And what has been running in the S&P since January 10th, right? Apple, Microsoft, Google, as I like to call it, Amazon, Tesla been going crazy. Tesla, Nvidia, XOM did a little something, but what Meta, what has been running, right? What has been running? Tech has been running, right? Tech has been running stupid. You know what I'm saying? Apple, Microsoft, Google, everybody, you know what I'm saying? Everybody know Apple, Microsoft, Google, they know them as the market movers, right? They know them as the market movers. Well, Tim, if the market movers, tech, been going stupid, why is the Dow not ripping? I'm glad you asked that question. Look, Timmy Rogers, right? Because when you look at, let's go over here to CNBC. CNBC.com, right? We're going to go to markets, right? We're going to go to U.S. markets, right? Let's put these side by sizzle. We're going to put these side by sizzle. Okay, Dow 30, right? The Dow is price weighted, right? Meaning the more the company cost per share, the heavier weighting it has on the Dow. And it's going to make the Dow move, right? If we sort these by the heaviest price, right? And we look at the heat map, right? Apple up 14%. Let's start with the ones that's the biggest. Tesla up 67.5% since January 10th, a month back. Since January 10th, 67.5%, right? Is Tesla in the Dow? No, it's not. Has no bearing on the Dow, right? What's next? Nvidia up 38%. Is Nvidia? I don't know if Nvidia in the Dow. I ain't gonna hold you. I don't know. I don't think it is, but I don't know. No, I don't see it. I don't think Nvidia's in the Dow, but I don't know. I'm not gonna lie like I do know. No, it's not. Nvidia's not in the Dow, right? Apple. I know Apple's in the Dow. Apple up 14%. Is that yes? That no. Meta, the next one. I'm sorry. Meta up 35%. 34.94. 35%. Meta is up 35%. Meta's not in the Dow. No bearing on what the Dow does, right? These are the ones that's been ripping. I'm just going off the ones that's big. The big, like, and on here, this right here is market up. If you look up here, I got it set to market cap, right? So I don't have it in no group. So the bigger the square is or rectangle, the more market cap size it has, not price, market cap, meaning, you know what I'm saying? They may be $1 trillion company gonna have a bigger square than $1 million company. Like it might be $1 million, it might be like a $40 million company over here, and this is a $2 trillion company over here. Is Apple still $2 trillion, or did they slip down? I can't remember. But so now in the S&P and the NASDAQ, that's market cap weighted, right? Let's go look at that. And then the Dow. You see the Dow, the biggest weighting on the Dow is United Healthcare because it's $492 per share. They're price weighted, right? It's only up 1.38%, almost 1.5%. Like no, I got to set. No, I need to set this. I don't. Scratch what I was just saying. I can't set it. What is this? How do I get this out of my way? There's no way for me to set. This is just for the day. There's no way for me to. Oh, you know what I can do? I can go over here. I can go to the Dow over here, right? So let's look at the Dow, right? Dow, boom. There you go. The Dow, no grouping, right? And you say, Tim, Apple real big in the Dow. This is only set by market cap, right? This is set by market cap. I don't know how to change this stuff in here. Price to book, FY price. See, I don't know how to get it just to the price. See, because it put Home Depot over there as the big. I don't know how to get it to. So I just leave it on market cap. But this right here, I can sort it by price. United Healthcare is the biggest performance a month back. So a month back, let's find United Healthcare. United Healthcare is only up. Hey, that's really close. I wonder if this set for the same thing. Because I got it on performance for a month back. That's really close. Okay, so 1%. It's only up 1% on the year, right? And that's the biggest. Goldman Sachs is the second biggest, right? Where's Goldman? Goldman Sachs is only up 2% on the year. Here's Goldman Sachs over there. See the difference between the market cap and the price? Goldman Sachs costs a whole lot more than Apple price-wise per share, but Apple is a much larger company market cap-wise. So in indexes that are market cap weighted, Apple will really influence that index. But in an index like the Dow, Apple is way down here. Apple is, let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Apple is number 16 in the Dow, right? It's way down the list as far as influence in the Dow, right? Because it's all based off of price, right? So the big Goldman Sachs, Home Depot down 2%, almost 3% on since over the month, right? We talking about the time frame of when the market, why the Dow has been consolidating and the NQ and the ES has been running. So we looking at, okay, what's leading the charge for the ES and the NQ? Tech, right? Tech has been leading the charge. Apple's in the NQ, Microsoft in the NQ, Microsoft in the S&P, Microsoft in, you know what I'm saying? These are the ones that they got heavy influence on those areas, right? Visa has a heavy influence, right? Visa look like it's in the top 10 of the Dow, right? It looked like it's in the top 10 of the Dow, but the Dow has been flat. So we got a lot of the top stocks in the Dow opposite of each other. So that's why the Dow has been flat. Home Depot, right, is a heavier weighting than Visa. Home Depot down almost 3%. Visa up a little over 3%. So we got a bigger weighting that's down almost as much as this is up. So that's pulling So it's making it be stagnant, go sideways, right? We talking tape reading and we talking why, giving a visual, a company representation of why it's doing what it's doing, right? So now we understand what's moving the Dow. We understand what's moving the S&P. We understand what's moving the NASDAQ, right? Tech has been leading. The tech sector has been leading. Tech, the NASDAQ is tech. The S&P is heavy tech. So tech over the last month has been leading what's been going on the price, right? And as you look over here, who has been the outperformer, right? I just said tech has been leading the S&P. Tech has been leading the NASDAQ, right? The NASDAQ has been the outperformer since January, right? The NASDAQ has been the outperformer since January, which leads us to get on that doggone high. Jeez, and give me a, oh my God, there you go. Now, and that leads us back to what we'll talk about with our bearish divergence, right? Our bearish divergence on 3. There you go. Our bearish divergence combined with the consolidation. Now we understand why it's consolidating. The top is conflicting with each other. The top of the Dow is conflicting with each other, right? We got some up, some down. So we just consolidating in the Dow. Tech has been leading the rally. The NQ is all tech. The S&P is heavy tech, right? So the NQ has been outperforming everybody else. This is the strength leader. The NQ is the strength leader right now. It's been outperforming everybody else. Just looking at the highs, we just looking at highs and lows. We just reading the tape, right? We reading the tape, looking at the highs and lows. It already, you know what I'm saying? Looking at the highs and lows, already reading the price action, already told us this stuff over here, right? But I'm trying to break it down in y'all know how every night I talk about speaking in people's love language. I'm trying to break it down in other people's language who don't know how to read these candles, or who think reading these candles is stupid, or who think reading this candle is just noise. I'm trying to give it in a language that everybody understand to bring us all together. Man, we talked about harmony, edifying each other, uplifting each other, getting rid of the negativity in 2023. That's what we're doing, right? So looking at the price action, right? We immediately understood we had the bullish divergence. The Dow took off. Dow went crazy, right? Took us back to the August highs. The NASDAQ was lagging. It was just consolidating after we got that bullish divergence. The the ES, it was the red-headed stepchild in the middle. So if the NASDAQ was consolidating, right, that lets you know that tech was not leading the Dow up because the NASDAQ was consolidating. When the NASDAQ is consolidating, tech is conflicting with each other. Like the big ones are conflicting with each other. So they're just consolidating. So tech is not leading this rally. So you're not looking at Apple, Microsoft, Tesla, Google. You're not looking at them companies during this time because they're just consolidating and they're fighting each other right now, right? And now people made a lot of money on United Healthcare, Goldman Sachs, whoever, right? They made a lot of money on all these different companies that was in these Dow companies. When the Dow took off and went crazy, they made a whole bunch of money over here in these Dow companies, right? So now, since January up until now, who have they been taking the money from? Right? Go to the Dow. We're in the Dow. Who have they been taking the money from in the Dow to start putting it over into tech? They took they took the most from. They took a lot of money from Johnson & Johnson. They took this over the last 30 days. They took a lot of money from Johnson & Johnson. They took a lot of money from Procter & Gamble. They took a lot of money from a lot of, like, most of the Dow. Look at the Dow stocks. Look at all these red Dow stocks, right? Everything in the Dow is down over the last month, except for CRM, whoever this is right here, Dow Chemical or whatever you call them. American Express is up pretty good. Disney is up. United Healthcare been struggling, but they still positive, but they've been struggling, right? Home Depot down. That's a big weighting. Visa up a little bit. United Healthcare up slightly. You see what I'm saying? But the Dow, they got a bunch. They taking a money out of, this is a broad base. Give me your money on the Dow, right? Out of 30 stocks, you only got 1, 2, 3, 4, 5, 6, 7, 8, 9 that are not negative. Out of 30 stocks, no, 10, 11. Okay. My bulb going out. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks out of 30. So 11. So 19 out of 30 stocks are down over the last, look like it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah. So 19 out of the 30 stocks are down, right? And then the big boys are in conflict with each other. Home Depot, Visa, United Healthcare. United Healthcare slightly up. Home Depot slightly down, pretty much the same amount. Visa, Visa is up a little bit. Where Cat at? Cat is down almost the same amount as Visa. McDonald's, another big one, is down. Microsoft is a big one. It's up pretty good. So Microsoft been doing the heavy lifting for the Dow. As you see, Microsoft is in the Dow. So this is the tech that's been doing the heavy lifting for the Dow. Right there. That's the tech that's been doing the heavy lifting for the Dow. If Microsoft start taking a break right now and the rest of the Dow keep doing what it's doing, the Dow is in trouble. Because Microsoft has been doing, like how Apple be doing the heavy lifting when tech running inside the ES, and Microsoft be doing the heavy lifting in the ES and the NASDAQ and all that. This is the piece of tech that's been the saving grace for the Dow, because tech been running, Microsoft up 13%. This has been the saving grace for the Dow, keeping it consolidating, keeping it from tanking, because they've been sucking money out of all of the Dow and putting it over into tech. And the saving grace is that Microsoft is in the Dow, and so some of the money has been staying in the Dow to keep the Dow consolidating. Why does this keep going down? Oh, because it's over there. Keep the Dow consolidating, as you see right here. Now, where you going with this, Tim? I don't know. I freestyle all of this. Now, looking at the price, how far down can we drop? Right? How far down can we drop if when tech starts to take a break? Right? How far down can we anticipate dropping when tech decides to take a break? Let's look at the price, right? What's below price in form of imbalances, right? The first imbalance on tech that catches your eye, we're already in it, right? Have not filled it, but we're already in it, right? We got a fair value gap, a daily fair value gap here on tech. The high of this candle right here is open high 12,156 even, right? So that's the bottom of this daily fair value gap on tech, 12,156 even, right, is the bottom of the first imbalance that tech needs to take care of, right? After that, that's 12,156 even, right? After that, you have a daily order block over here, a bullish order block. The high of the order block, God dog it, where did that go? Hold on, where my field back? Okay, the high of the order block is, they don't give me a thing on those over there. Open high 1230 12,308.50, 12,308.50. Let me mark that out. And the low is 11,960. 11,960, right? I went through all that just so I can find what the and then so that's right around the mean threshold of that. Wait a minute, that's not right. What's the high? So open high 12,252. What did I get that from last time? I was on the wrong candle. 12,252. 12,252 and then 11,960. Okay, so the mean threshold of that order block is 12,106, right? 12,106. Those are levels you can anticipate the NQ attacking, right? Why is it attacking that? Right, we're already past the consequent encroachment of the fair value gap. Right, we're already past the consequent encroachment of the fair value gap. I probably should have did that. I need to put it where I can snap. Let me scrunch this up. I need to put it on this one here so I can snap, so the screen can snap, because it's driving me crazy not being able to snap. All right, so boom. Consequent encroachment of this fair value gap, we already passed that, right? Since we're past that already, now we turn our attention to the bottom of the fair value gap as, okay, we possibly want to come fill that. That's the 12,156, right? We can possibly want to come fill that, looking at where price can possibly go if tech starts to take a break, right? Where can price possibly go? That's what we're doing now, reading the tape, right? So we're past the consequent encroachment of this daily imbalance that we're in right now, right? Besides that daily imbalance, we got a daily order block right here. The top of the order block to the open of the top of the bullish order block to the open of the bullish order block is the most sensitive part of, well, I ain't gonna say the most. You got two sensitive areas, right? The top of the top wick from the high to the open, and then you got the mean threshold, right? So the mean threshold for this order block is 12,106. 12,106, right? 12,106 is the mean threshold. So you're looking at the most sensitive areas for these PD arrays below you to anticipate some type of reaction in the price or some type of destination for the pullback, right? Looking at how far can price go if tech takes a break. Excuse me, I got to make this so I know what it is. All right. Then, so the sensitive areas is, this is the, so you're looking at that 1252, 12,252 down to 12,212.50, right? That's the order block. You're looking at the 12,156. That's the close of the fair value gap. Then you're looking at the 12,106. That's the mean threshold of the bullish order block. The same thing as the high, right? If the mean threshold, if price gets down through the mean threshold of that order block, where do you turn your attention to next, right? Two stops. Consequent encroachment of this daily wick right here, right? Consequent encroachment there, and that's and that is 11,927.50, right? 11,927.50. 11,927.50, and then that sell side right there. That sell side right there. Right? So this order block's job is to keep price up. Right? This order block's job is to keep price up. Right? If this order block fails, meaning we get past the consequent encroachment and we slip all the way down and take out this low on July 31st, right? These are all the areas in between now and this low, right, that supports price to spring up in the short term right here. Support, all this right here supports price in the short term to spring up, right? Once we come down, if we come down and break this low, right, now you start to turn your attention to what other imbalances is down here, what lows are down here, and you do the same thing all the way down, right? Look at this next, you break this low, you look at this next low, take into account 50% of that wick, consequent encroachment of that wick in that low, right? Once you get past that, what else do we have? We have another imbalance that we haven't completely filled because we came down into this 2 candle order block, bullish order block, and it kept price up. Just like this order block's job is to keep price up, just like this order block right here job was to keep price up, just like this order block's job was to keep price up, right? This order block can be expected to do its job, but we've come a long way. So is the gas running out? Is it time to come back and take out some sell side before continuing up? Now, what would just kill the bullishness, right? What would kill the bullishness? Saying, okay, we're sliding down. Step one, and all this on the NQ. Step one, that would kill the bullishness, right? If we get below this January low, right, and get down into the discount, down here and continue to slip and continue to sail down, now what you want to start paying attention to is where we at? 50. Okay, what you want to start paying attention to, what I just did there is I've split up. Let me put one up here too. Let me put one up here too. No. Where's my? I can't get my. Why my dog online ain't showing up? Where's my? What's going on, man? Why is this not? That's up there. Hold on, man. I'm going crazy right now. I don't know why I can't get that line to come up where I wanted to come up at. But anyway, right? Once we come back, right, from this high to this low, this is equilibrium, right? Once we come back down here to equilibrium, if we break through this equilibrium and keep selling off, right, this is what you want to look at. I'm breaking it. Imagine this another line right here, right? I can't get the line to pop up for some reason. I don't know why. I can't get a line to show up. Oh, I know what I did wrong last time. This is what I did wrong last time. There it is. That's what I did wrong last time. I didn't put the point in there. So now I just broke it down into quadrants. I broke the area down into quadrants right here, right? So from here to here, right, we're in the premium, but right now, this fair value gap right here and this order block is in the discount of the premium, right? It's in the discount of the premium. So if the bullishness is still very strong with this one, you buy in the discount, you sell in the premium, right? You notice when we're up here in the premium and we're consolidating, and so the price is selling down. We're selling down in the premium. It's not falling very fast, but we're selling down in the premium. But now we're below equilibrium. See, yesterday we got down to equilibrium, had a reaction off of it. Then we came back down into this fair value gap that's in the discount of the premium. And now we're reacting off of that, right? So now we coming down. This is a deep discount of the premium, right? This is why I was like, this is the last line. Once we break this down and you start looking here. Why? Because once we break through this right here, we're in the discount of the premium. If we slip past this, now we're getting to equilibrium of the overall run. And this is what the market sees as fair value on this price run right here. So once we get the fair value, we're in the middle of the road, right? You're in the middle of the road. Market needs to show me what it wants to do now, right? So we're in the middle of the road. What are we looking for in the middle of the road? We're looking for what PD arrays are below us, what PD arrays are above us. We don't know that now because we're not down there. You will be looking on this price leg over here for what PD arrays are above you. Let's just say it's looking all dismal and bad. So then you look over here, and now you're in the premium of the discount. So if the market wants to continue its bearishness, you're in a premium of the discount where it can continue to sell down because you're in the premium, right? What can it sell down to if we get down to consequent encroachment on this wick right there? What I talked about, we get to consequent encroachment on the wick, right? Come here, get the consequent encroachment on the wick, which is 11,739, right? And we still want to push down, right? We still act like we want to push down 11,739. Then we're looking at the low. Okay, we're going to come take out this sell side. We come take out the sell side. Then we got this imbalance that we need to fill, right? Once we get that imbalance and we need to fill, now we're looking at what? This sell side here. But oh, Tim, wait a minute. Look where that puts us. I'm glad you saw that, little Timmy Rogers, because we was going into what negates the bullishness. Look where that low right there puts us at. For anybody who are familiar with the teachings of our mentor, Michael J. Hudson, aka ICT, right? That puts us at the classic OTE area, right? Anything in between 62 and 79, you got 62, that's the first step. The 70.7, that's ICT's preferred entry on OTE, and then you got the 7.9. This low right here puts us right in the OTE entry for this entire price run, right? So you can expect the price to try to bounce until you break below all of this OTE stuff. You got a small imbalance down there. Once your first thing of doom and gloom for this to continue, this is the NASDAQ. The first spot for like, oh, this is doom and gloom is on a daily level when you get down below, if you get down below 11,1275. If you get down below 11,1275, then your heart can start palpitating. Your heart can start palpitating a little bit, and you can say, okay, it may be time to switch thesis of us taking out this October low. Right? This October low. Right there. That's the first sign. Right? The second sign, right, will be taking out these relative equal lows right here. Because you take out these relative equal lows right here, the next step is the October low. And once you take out that October low, you just sit on that's a destination. You sit on your hands until the algo give you a confirmation of direction, right? Confirmation of direction. Now that we've taken out this sell side, do we want to slide lower or do we want to continue back up? Was this just a pullback to run out everybody that went long down here and be a dirty, nasty dog like the algo is, to come take these people out the game just to take back off and go to all-time glorious highs? And that, my cousin, is tape reading 101. Did it in the form of how I do it with just looking at the candles, and I showed it in the form of what's creating the highs, the higher highs, the lower highs, the consolidation in the terms of companies. For people who say, hey, I don't understand these freaking candles, but I understand companies. Hopefully you understood what I was saying when I broke it down. And let me get all it. Let me switch this back to ES. Switch that back to ES. Hey, where did they go? Did I take them off? Oh man. Did I take them off? The little panels? Why did they go away? Did I X them out? Oh, I didn't try to X them out. No, they're there. They say they're there. Where are they? Okay, I'm confused now. Because they're here. Shouldn't they be down? Shouldn't they be over here where I can click on them? I know I ain't tripping. Oh, okay. There it is. All right. I know I ain't tripping, man. Okay. Yes. So what I was saying. Hopefully I was able to express it in a way that everybody understands, where I was talking about what created, the run back here, the Dow companies. When you saw the NASDAQ was kind of lagging, so that lets you know that tech was not leading this run when the Dow went crazy. And then over the last 30 days, tech been going crazy. And so we went and looked at the Dow over the last 30 days, and you see the Dow has been majority down. Like 19 out of the 30 stocks in the Dow were down over the last 30 days. Microsoft, being in tech, was one of the biggest contributors to the Dow. So that was helping keeping the Dow going sideways, because the other big dogs in the Dow, they were taking money out of it, taking money out of a lot of the Dow, creating the consolidation, creating the bearish divergence. And then once we looked at the bearish divergence, we said, okay, if tech start taking a break, how far down can we expect tech to go? The reason why I was looking at the NASDAQ is because tech was leading this rally, right? Tech is not that big in the Dow. Tech is huge in the ES. So I didn't bother looking at the ES, because if tech start to slide, the ES gonna slide too, right? So if tech starting to slide, then we started looking at, hey, instead of trying to predict what the company itself going to do, because the company hasn't done that yet. We can't predict what the company going to do, but we can use the price action to anticipate raids on certain PD arrays, certain liquidity pools. We can anticipate raids on these areas to give ourselves a clue of where price can potentially go to the downside if tech start taking a break.